Hello and welcome to ETBFSI.com. My name is Amol Dite and I'm in conversation with Chandresh Nigam from Axis AMC. Glad to have you, Chandresh.
Good to be here, Amol. Thanks for having me.
Thank you. So ESG or sustainable finance or sustainability, whatever you call it, it's an emerging sector and all the regulators in the world, the financial institutions are looking at it far more aggressively. I think everybody is marching towards green finance these days and looking at proposals from the large companies whether they have any objective of carbon neutral or not. But this conversation is a bit different, though the topic is the same. I think since you have already a ESG fund there, so I would like you to tell us, what is this all fund about? What is the objective behind it? And what kind of response are you getting? Because this is not, a fund where, what you can say, which can compare with thousand other funds, right? This is something unusual, which not many people are actually thinking of launching yet. And you are actually in top of the list. So just tell me, Chandresh, about this fund first.
Maybe, Amol, it may help if I can just give you a little bit of a background to this fund launch, and then we'll talk about the fund itself. So number one, obviously ESG as a theme has been really at the forefront. Initially on part of institutional investors and hence many of the AMCs, and now increasingly we see it not just institutional investors, but also HNIs and even other retail investors embracing that. So people wanting to see a lot more purpose to their investments. But let's go back maybe 3, 4, 5 years. As I said, the institutional investors globally were driving this as a theme. But when you look at it from our perspective, we've been in business now for about 12 years. The key theme for investing has been sustainability. So sustainability involves a number of things: organizational competence, competitiveness, management strength, vision, execution capability, and all that. And so that is what you look at it. So the key word is sustainability. And after all that also came things like minority shareholder interests, governance. I think that's a key one. And over a period of time, what has hence got added to the entire whole sustainability investing theme has been more on the environmental factors and the social impact of organizations. So we at Axis saw it as an extension of our investing style, which has always been in support of sustainability. We look at businesses which can really grow from a long-term perspective, and you can't grow if your business is not sustainable. The key ingredients which makes a business sustainable have always been there with us. And at the same time, we are seeing that from a global perspective, ESG, as it is being called, being added up. So when we decided to launch this fund, we saw it as an extension one of our style of investing, which has always been look for sustainable businesses which can really grow. And at the same time, incorporate some of the new things, which, as I said, like environment and social aspects, which we did and then showcased it and put it out as a new fund. We did this fund about a year and a half back. And the key aspect at that time, the conversations with customers, intermediary partners, etc., was that why is this fund really required at that point in time? Will it have lower returns? Are we kind of restricting ourselves in terms of the opportunities we can exploit, etc.? I think while internationally there has been a lot of data which actually says sustainable businesses actually do much better, and so also the limited data we had at that point in time, because at that time there was only one ESG index, etc., and which did not have too much of a track record. But we kind of linked it with our existing investment philosophy of sustainability to show that actually ultimately it's only the sustainably growing businesses which will do well, and that data is already in there. So we had a very good fund launch. The fund's been doing well. From a little bit of skepticism, let's say 2 years ago when we were in the market trying to raise this fund, today I think stuff has changed. People are actually, and we see many intermediary partners onboarding this product, recommending this product, wanting to showcase this product, because now the investors have started to ask for how is it that my portfolio is aligned to ESG as a theme and sustainability as an underpinning of the entire portfolio, and something which runs for a long period of time. Now, interestingly, there's one more thing which has happened globally. It has not happened in India, but which is something which is a pointer for things to come. If you see the last year and a half, data suggests that most of the new money which has gone into active funds, and that is I'm talking on a global basis, has gone into thematics where sustainability, I think, is the key part of this whole thematic theme. Maybe 80%, 90% of the money is into what we will call as sustainable strategies and sustainable themes, incorporating ESG, incorporating the stuff you talked about, climate change, etc. So all in all, I think the theme is getting much stronger. We have run a fund, as I'm saying, nearly 2 years now. But the theme is not just limited to this one fund. Our existing funds also are now run with a similar process, sustainability process, incorporating ESG. We do scoring, we do all that. So it's a matter of time where more funds will, while they may not be called ESG funds, but will start using, and they've already started using the same theme, the same metrics, etc., to track how the fund is faring on ESG itself. And I think it will continue, and it's just the march is relentless. I did make a point that a large number of customers, institutions, obviously very, very focused. In international investors, one of the first points which they want to see, how are we positioned to incorporate ESG in our own investment framework. So it's not something like a tick boxing that you just put a list of companies. How do we engage with them? What do we do with them? Because everything has to move. That entire ecosystem, the reason why the regulator is also getting in is we want also companies to become a lot more sensitive on the sustainability issues, environment issues, and how we work with them. So we see our role at three levels. One, to incorporate it within our system. Two, to incorporate it and make it public and say why it is important for every investor to look at fund managers or funds which incorporate that. And lastly, again, very important, the investee companies also to kind of move in a direction which makes their business more sustainable and more attractive for potential investors.
So let me ask you a specific question. Do you believe sustainable funds can perform and give better outcomes than the non-sustainable one in the long run?
So the answer is there in your question itself. I mean, if it is not the case, then why people should do sustainability things? It's not as if that this is, so whatever is good for environment, good for society, good for employees, I think ultimately will be good for shareholders. And that has been the reality in the past. Every product today you see in the market and you see the packaging of the product, it will talk about whatever commitment that organization has to sustainability, whether it is sourcing of raw materials, treating vendors, and all that kind of. It's there in the raw material ingredient. I mean, many products which I consume and you consume, I think if you just take a closer look at that, there will be some indication of that. Why are these companies doing it? Because their consumers are, asking them that, hey, are the ingredients sourced from vendors who follow ethical practices? They are not degrading environment. They are not using child labor. They're not, or bonded labor, or whatever. So I think so. If the consumer is anyway asking you to, and for that matter, you polluting the environment or anything. So the customer is your customer. Ultimately, the wealth of the value of the business is how many customers and what kind of prices you can charge them and how sustainably that thing is going to grow. Second important thing is employees. I mean, today there is a war for talent, and employees want to work for companies which have a larger social purpose, in addition to just making profits and just being financially successful. So I think if you just take the two things, there are many other things, governments, and there is society at large, which will anyway force companies to act ethically and do the right things. But even if you just, so that is government, the legal situation, society at large, etc. But just to look at these two, customers and employees, which anyway you have direct control and you are different, they are going to force you to do the right thing. And I think if you don't have customers or if you don't have talent, anyway, those businesses will not succeed.
Right.
So this is a key ingredient for, I mean, if you're looking at businesses 5 years, 10 years from now, if people don't address this, I don't think they can perform financially. Their stock prices certainly cannot perform. So 100% sustainable businesses are going to be the wealth creators.
Okay. Noted your point, Chandresh, but the question that comes to my mind is, and we'll be happy if you enlighten us on that part, is how do you actually allocate funds? Considering, most of the companies are in nascent stage when it comes to sustainability, not the typical sustainable business model, but the sustainability where we talk about the ESG compliance, carbon neutral. So how tough it is for you to actually allocate your funds?
So actually, if you ask me, it was not difficult for us, and I'll tell you the reason. And part of it is what I already mentioned. When we look at a business, we are already focused on looking at the 4 or 5 parameters which we look at when we are evaluating sustainability and growth potential. For us to add a couple of more parameters, largely governance was always included. Management, quality, vision, which I talked about, were already there. Governance was already there. So E&S was something which we had to specifically, not that they were not on our minds, but we had to kind of, as a discipline, incorporate in our analysis, etc. Now, when we did that, we actually did not face too much challenges. The challenges was actually in doing the analysis. The challenge was not in terms of saying that, hey, because of this, we are not going to be able to invest in many companies. So it's not as if our investment universe shrunk or anything. So actually, it's been a fairly, I would say, a smooth exercise. We have incorporated the stuff. We have obviously figured out that there are some businesses which we have to probably give more weightage. Some businesses we may have to, at the margin anyway, it doesn't affect our core holdings. And so it has been actually a pretty smooth transition for us. Luckily, as I said, I think ESG is becoming very important. Many of the companies are now talking about, and they're coming out with large write-ups on what they plan to do on ESG, etc. Our approach is not to say, yes, there may be a list of really negative list where we will not invest in those businesses. But the whole idea of this ESG approach is not to completely say that, hey, we will just knock off 40% of our universe. The idea is to see what these companies are doing. Can there be a scenario where we can see over the next 3 years significant improvement in ESG scores, which means we can have some exposure to these companies, not that we will go and make a very large. So either we have companies with high ESG scores or companies with reasonable ESG scores which are working consciously towards improving their ESG scores. And I think that is a reasonably large universe with which to build our portfolios. And as I said, since we were anyway so much focused on sustainability, our universe actually has over time only expanded. It's not really come down. So no real challenge as such. But yes, I can understand that there could be some other asset management companies which have a much larger universe, and because of ESG really getting integrated, they may have to relook at the universe. At Axis, we have not had that challenge.
Just to get me, more understanding on this, could you share, if you can, the name of the companies which are part of your portfolio?
I think that thing is always available. I think we can send it to you. The entire portfolio is available. It's a monthly disclosure which we make. All the companies are in there. And you might actually see that there is some congruence or some overlap between our other funds as well. Because that's why I said that we didn't have to make too much of a change to our portfolio strategy or our universe, but we can make it available. The entire portfolio.
When you look at the response from the investors, those who are subscribing to these funds, how has it been? Is it a different? Is it really low? Is it really good? Is it great?
So as I said, 2 years back, we did have that challenge. People did ask us that you will probably, because that was the general perception of ESG, that no large part of the universe will have to be, those opportunities would have to be, let go by. I think that was a challenge at that point in time. I think 2 years have shown, and we have also educated, and people are anyway getting educated about whatever is happening in the ESG space, both globally and after us, many of the other fund houses have also come and launched products. So I think today the investor knows, those who want to know, that is, who care about ESG, and that tribe is obviously increasing, that ESG is the right thing to do. And this is happening both at the investor level as well as intermediary partner level. So I think 2 years back, acceptability was low. Today, there is a lot more acceptability. And as I said, if what we've seen in the global markets, where incremental flows into actives has been virtually 100% into sustainable strategies, I think there's something which will follow in India as well. So that its adoption at one side from asset management companies and acceptance from the channels and the investors is anyway going to keep rising.
Okay, let me ask you one more question on the investors, because when they are investing into funds, the basic question is about the returns, right? So any proportion that you have made in terms of what could be the basic or the average returns that the investor should keep in mind while investing in this fund, or how much returns this fund can offer? Any analogy there?
So anyway, as you know, we are looking at trying to invest in businesses which long term give superior risk adjusted returns. That's a portfolio level target, as well as when we look at individual companies a target. We cannot probably give out a particular number. But the reason we have done this fund is not just because we are going to invest in companies which have good ESG practices. Our real belief is that these kind of companies, as I've discussed in response to some of your queries, the earlier query, is that we believe that these companies will do well. The global data certainly shows that. In India, we don't have too much data, but whatever data we have already shows that these set of businesses have done marginally better over the last 3-4 years. And our sense is in the long run, actually, it should do better than strategies which do not use or invest in companies which have a high ESG score. So I would actually say that people should not worry that, hey, this is an ESG fund and hence returns will be less. I mean, my assertion would be that over a period of time, actually, these funds will do much better than some of the other funds where ESG scores are less. So I see a positive correlation between returns and ESG scores of the underlying portfolio.
Okay, noted your points. So as we understand, the regulators, central banks, and everybody's, even the boards of the top companies are looking at sustainability and specifically the green finance far more seriously now. By any chance, do you think on the financial side, it's difficult for large companies to completely go or even gradually, reduce their carbon emission and go, what you can say, carbon neutral, very in a seamless manner? Because the kinds of investment which they have already done, for example, auto companies, or the other infrastructure companies, do you see some challenges for such companies to reduce reduce their carbon emissions going ahead, and it will take a long time?
See, I think it's a very good question, and it's something which I think the entire industry or the corporate sector is grappling with. Given the scenario where asset managers, mutual funds like us, and investors or final investors in these companies, because institutional investors like us or global FPIs, etc., when they are investing directly in some of these companies, they're raising the same question. So it's not as if it's just the regulator. I think so. They're basically saying, if the owners of the business or potential owners of the business, these are listed companies, many of them, and if we have to attract those investors, and these investors, for them, ESG is important, so anyway, we need to move. So I think that debate is more or less over. Do we need to do something on ESG? I think any corporate worth its name is basically saying, how do I improve my ESG scores, in the sense for my employees to feel good, for my customers to feel good, and obviously from shareholders' perspective. Now the question comes, how do we do that? And obviously I think the first step is recognizing the fact that we need to do something. And as I said, most corporates have already started on their journey. So that first step is already taken. Now, it's quite possible that there are some companies where you have a very negative carbon footprint, etc., and they will take time. And we have to, as investors and as participants, have to accept that. The key thing is to say, and I did point out in our ESG framework, if there is a reasonable score, but the direction is clear, I think we have to kind of, in some sense, support these businesses. And that is exactly what some of our more sophisticated investors are asking us. None of them is saying that you just completely junk this business and completely go away. I think one of the roles when people see as investors is what kind of impact I am doing. The impact is not to say that, hey, just completely shun away all these old businesses. The impact is to say, how can we make them or help them make, reduce their footprint. So whether it's a zero footprint, yes, great. Then it's a great company to invest in anywhere from a climate change or an environment perspective. But if it is too negative, even if it becomes less negative, that's a positive impact I am making to the
Right.
environment, etc. So I think impact, ESG is also getting used in terms of impacts, whether it is social impact, environment impact, climate change, how is my technology helping to reduce temperature rise and all those kinds of things. So I think it's actually evolved into a reasonable holistic discussion on where all we can invest. So I don't think companies should get discouraged that, hey, I've got a very negative, I'm starting with a very negative score, etc. But as long as I think they commit resources, development of technology, etc., I think there is enough interest, at least on part of sophisticated investors, to come in. I think looking at some of the offerings which we have had, green bonds, etc., I think capital is available, which is essentially what investors are looking at. They want to really make an impact. So if there are companies who are in areas where they can certainly change their impact, environment impact, etc., I think there is enough support available both from debt investors as well as equity investors.
Okay. Slightly, what you can say more on this front, but is it going to be, what you can say, a compelling task for the companies in terms of from the banks or the financial institutions perspective while lending them, that until and unless you don't have XYZ category in your, what you can say, in your proposal, perhaps will not look at giving you the full loan or something like that. Do you think that that might happen, or it already started happening?
I think it's already happening. I think many of the financial institutions are already taking targets on what kind of carbon neutrality they will have, not neutrality or reduction in carbon
Right.
footprint they will have on their investee companies and how the book looks like. So I think first stage is measurement. Second stage will be taking targets over the next. And I'm sure these are not going to be short-term targets because some of these
Right.
things will take time. I think the work is already underway. And that's one area where I think many of the frontline Indian financial institutions have already incorporated all this, and there are some serious aggressive targets already coming in there. It may not be what everybody expects. The speed it will take some time. So I say
Right.
we have to do some kind of handholding, etc. But I think it's all already underway.
For the fund and specifically for your sector, do you wish that policymakers or specifically the regulator should offer some incentives, or there should be some incentives so that the investors will get, what you can say, be encouraged to invest or look at this particular product very seriously?
That's a tough one. I mean, I've not thought about it because my
Right.
belief has been that actually this is good for investors anyway. We don't really need any great further incentive. So I don't want to kind of jump the gun and say that, okay, now you should give me some fee break or anything of those kind of
Right.
things. But because that's not required, I think it is going to be good for the investor if it is done in the right way. And on top of it, I think investors will feel. I think one thing which we don't do, and I think it's a little bit for the asset management companies to do, is to make the investor feel proud that he is investing in a fund. So there is more deeper connect which the
Mm.
investor has. It's not just a fund and just an NAV, but actually there's a deeper connect of the investor to feel proud about having invested in companies and supporting companies which are doing good for the society at large, whether it is environment, social, or governance factors. Regulators already doing his bit. I think stewardship code and all that, and in fact, not just our regulator, but even at company level, forcing companies to write out a responsibility impact. And I think, as I said, many companies have already come out with those documents, etc. So I think already there is enough regulatory pressure to do the right thing. And while obviously there could be more which can be done, but I think there's lots to be done by the industry, asset management industry, corporate sector. But they're all moving in the right direction. At the end of the day, it's the money which will move it. I mean, if companies figure out that they are losing out on their PE valuations or whatever because investors perceive them to be low on the ESG scores, I think they are anyway going to change. So I think we have the right incentives. It's just a question of the entire set of people to get more educated and sophisticated. Investors ask for the right outcomes. We as asset managers ask for the right outcomes. I think the whole and that the cycle is already started, I think. So I don't think there's anything specific which is required.
Okay, noted your point, Chandresh, and let me shoot my last question to you is specifically what kind of a rally now do you see in this segment? Do you see more ESG funds? Do you see more green bonds going ahead? Because now, there is some kind of interest which has already been developed. So how far this rally will go and how do you see this market shaping up in next maybe 2 to 3 years?
So as I said, I don't think we will need, we have one ESG fund and so have many of the other AMCs. I don't think we launch more ESG funds. I think the trend will be obviously ESG funds will grow. And then slowly, as I said, all the ESG practices which at Axis anyway getting incorporated in managing all the other funds also. That is where I think the big shift. I think over a period of 5 years, investors will, like we are asking corporates to show high ESG scores, I think investors will ask each of their funds, forget about the specific ESG fund, but each fund to be run in a more sustainable manner. So that's where the growth is. So I would think that the overall portfolio, the overall AUM of the mutual fund industry stroke asset management, you will see a lot more responsible and sustainable investing.
Okay. Noted your points, Chandresh. I think a meaningful one. Thank you for sharing your perspective on this front and joining for this conversation.
Wonderful to be here. Thanks a lot, Amol. I think this is a really, really great area. And I think the one thing which sometimes there is a misconception that ESG means making some compromises to your long-term returns. I think that's not true. In fact, I think this is at the heart of actually making your portfolio future-proof, lower the risk, and at the end of the day, probably superior returns.
Noted your points, Chandresh. Meaningful one. Thank you so much.
Thank you.